Welcome to the Hurst Trading Room. This is our video update for the 8th of April 2013. We've had a really good week in the Hurst Trading Room using the FLD trading strategy. We have a full house of profitable trades, and so let's take a look at the markets. Before we do, please make sure that you have read and understood these disclaimers. Let's start as always with the S&P 500. Now, last week we identified a potential short trading opportunity, and I spoke through the analysis and identified the fact that this might be a D category short trading opportunity, or in fact an F category short trading opportunity, depending upon which analysis you believe is playing out in the markets at the moment. Either way, of course, we entered into a short trade as price crossed below or interacted with the 20-day FLD, which it did on Wednesday of last week. As you can see, I've just drawn over the FLD, and so as price came down to that FLD, we entered into a short trade, and our T1 target was at about this level over here, and so our T1 target was taken out on the day of entry, which is not an unusual thing. It very often happens that we exit from our T1 trade on the bar of entry, and we take our small profit. And of course, we also not only take a small profit, but we also adjust our stop loss on our remaining two trades. We adjust our stop loss to halfway between our pivot point, which was up here, and our entry point, which, as you can see, was over here. And so that was our entry point. So we would have adjusted our stop loss last week. On the bar of entry, we adjusted our stop loss to halfway between the pivot point and the entry point. On Thursday, the markets pulled back to the 20-day FLD, which is something, again, that you very often see. Remember, the 20-day FLD, or any FLD, is a very powerful line for the markets. And when the markets come down to an FLD, they will very often pull back to that FLD. We've seen a lot of very powerful interaction between price and the FLD recently. In fact, if you look 2 weeks ago, you'll see that every single day the market bounced back and forth, playing around that FLD, what we call tracking along the FLD. So on the Thursday, price came back to the FLD, but it didn't have the strength to stay with the FLD, which is of course what we expect when we're in a D category or an F category interaction. And so price pulled back down again on Friday and took out the T2 target, which was at this level over here. That's the T2 target, at which point we took a handsome profit out of the trading opportunity. And now, of course, we have only one trade that is still open for this trading opportunity, and the stop loss for that trade is at the level of our entry over here, which means that the worst thing that can happen to our third trade for this particular trading opportunity is that we exit at the break-even level. So we have locked off a profit for this trading opportunity. So only 2 days after we'd entered into this trading opportunity, we already had a locked off profit. And of course, if the market continues to go down, then we stand to make a much greater profit out of our trade 3. If this trading opportunity is over, which it might be, then price might well bounce back and interact again with the FLD, in which case, of course, we would exit from our trade 3 at a break-even level. We have, of course, also started implementing our 3-bar trailing stop, although that does not give us a tighter exit than our break-even exit. And if we were to count our bars back, you'll see that's bar 1. Bar 2, or at least the second bar back, which was Thursday, was an inside bar. As you can see, Thursday was an inside bar with a range within the previous day's range, so we don't count that bar. And so our bar 2 is over there, and our bar 3 is over there. And so our 3-bar trailing stop hasn't really kicked in yet. It's not giving us a better exit level than our break-even level. So that's the situation with the current trade. The question now is, of course, what's going to happen next? Well, as you know, this might be a category D or a category F short trade. And as I mentioned in last week's video, that doesn't make much difference in terms of our entry into the trade, but it does make quite a lot of difference in terms of what we expect next. So let's just zoom out here and take a look at the slightly bigger picture and see if we can determine what it is that is expected to happen next. I'm going to zoom right out here, and let me just turn off the trading so we can concentrate on the analysis for a moment. Now, as you know, there are two possible analyses that are playing out in the S&P 500, and this analysis places either the 80-day or indeed the 20-week cycle trough over here in the last week of February. I say very glibly either the 80-day or the 20-week, as if that makes no difference. And in some ways, it doesn't really make any difference in terms of trading the 20-day FLD. Because, of course, we primarily look up to the 80-day cycle, and whether that trough in the last week of February was the 20-week cycle trough or the 80-day cycle trough makes very little difference in terms of our trading decisions. Okay, so this is, in my opinion, a very likely analysis for what is happening in the S&P 500. There is an alternate, which we will look at in a moment, in the NASDAQ. What I tend to do, and the reason why I trade closely correlated instruments, is that I choose one analysis to trade in one instrument, and I will choose the other analysis to trade in the other instrument. And in that way, I am making trading decisions on the basis of all the analysis information that I have available to me. And so what is happening according to this analysis? Well, according to this analysis, if we zoom in and take a look at the most recent period since the most recent 80-day cycle trough, as you can see, we've had a fairly good, clear interaction between price and FLD. There is the most recent 80-day cycle trough, which, as I've mentioned, might be a 20-week cycle trough. And here is our category A interaction, which was a very typical, very good A category interaction. Here was our B category interaction, at which time price tracked along the FLD, which is exactly what we expect. Here is our C category interaction, and these interactions we were able to identify at the time, of course. And in fact, I didn't trade long for the C category interaction because I expected that to be a fairly disappointing move up, and you can see it was a fairly typical C category trade. It achieved and slightly exceeded its target, although depending whether you calculate the target on the basis of the cross over the weekend, you could say that it exactly achieved its target. So so far our FLD and price interactions look very good. The interaction that we traded last week was, according to this analysis, the D category interaction. So we are now in a short D category trade. What do we expect next? We expect the price to bounce out of the 40-day cycle trough that it should be forming now, and might have formed on Friday, of course. We expect price to bounce out of that, and we would enter a long E category trade as price crosses back up above the FLD. That's according to this analysis, and I am trading this analysis in the S&P 500, and so I will be entering into a long trading, a long trade at the level of the FLD if the S&P 500 comes back up to the FLD. But I am going to be watching it very carefully, because I have to keep in the back of my mind that there is an alternate analysis which warns us that price will come back up to the FLD in a G category interaction, and we'll speak about this alternate analysis in a moment in the NASDAQ, but we need to keep in the back of our minds that we might be seeing a G category interaction next, which would involve price coming up to the FLD, tracking along it, and then breaking down again. So we need to keep that in the back of our minds. And of course there are many ways of making clear decisions on the basis of two possible things that are playing out, such as reducing your risk and all that kind of thing, which are covered in the FLD trading strategy course. So let's take a look at the NASDAQ and see what's happening in the NASDAQ and speak about that alternate analysis. Here is the NASDAQ, and we also entered into a profitable short trade in the NASDAQ last week. As I mentioned on Monday, or at least on Tuesday in last week's video, because of course Monday was a European holiday, and so I was on holiday on Monday, but on Tuesday in last week's video I mentioned that price had come down to the FLD. Of course, because of our Monday trading rules, I hadn't entered into a short trade at that point, but I was standing by to enter into a short trade, either a D category or an F category short trade. And in the NASDAQ, with the analysis that we have on this chart, of course this is an F category short trading opportunity, and we entered into that short trade on Wednesday as well, as you can see at this level over here. That's our entry price, and our T1 target wasn't taken out on the day of entry as it was in the S&P 500. Our T1 target was down over here, and it was in fact only taken out on Friday. And our T2 target was down over here, and that target was also taken out on Friday. So Friday was a very profitable day for us in the NASDAQ. We took our profit at the T1 level and at the T2 level, and of course we adjusted our stop on our remaining trade 3 to the entry level, which is over here. So for our trade 3, the worst thing that can happen now is that we exit at a break-even level in our trade 3, and so we have locked off our profit for this trade, and we've taken our profit from this trading opportunity. Of course, the important thing now is to decide what's going to happen next. Final thing I should mention about this trade is that, of course, our 3-bar trailing stop has kicked in, and if we count back our bars, that's bar 1, that's bar 2, and that's bar 3, no inside bars there, and so our 3-bar trailing stop exit level is right up here, near to 28.20. And so, of course, our break-even level provides us with a better stop, and so we're not implementing the 3-bar trailing stop, or at least we're not using that level as our exit level. We will use the break-even level. So what's going to happen next? Well, let's take a look at our analysis, and as I have mentioned, I am tracking the alternate analysis for what's happening in the US markets at the moment in the NASDAQ. So let's turn off the trading information, focus on the analysis, and this alternate analysis, as you can see, places the 80-day cycle trough back here in January. The actual placement of that trough is very much up for debate. There are several troughs within the January and early February period that make very possible positions for that 80-day cycle trough. Any one of them is possible and very viable as an 80-day cycle trough. Now, the reasoning behind this analysis has to do with this very clear cycle that you can see over here. And I've been speaking about this ever since the beginning of this year, and that very clear cycle warns us that we have a potential 20-week dominance cycle, which tells us to expect a subtle 80-day cycle trough, which is indeed, according to this analysis, exactly what we saw playing out in the markets. The other thing that often happens following that subtle 80-day cycle trough is that you get a straddled 40-day cycle trough. Here is the 40-day cycle trough, and a straddled 40-day cycle trough should be fairly symmetrical in terms of price action. And you can see it wasn't very symmetrical, but it is symmetrical enough. Price didn't in fact come very much higher following that 40-day cycle trough. So that still works as a 40-day cycle trough. And then, of course, you expect the market to come down into the 20-day cycle trough. And there's the nest of lows for the 20-day cycle trough. Now, the FLD and price interaction sequence is not nearly as clear in this analysis, which is one of the reasons why it's not my preferred analysis, but it is still a very possible analysis. There is our A category interaction, then B and C. There is D, and there is E. And you could argue that the F category interaction happened over there, and that what we've seen since then has been the G and H category interaction. That's a definite possibility, something to bear in mind, which means that we are now in a short H category trade. Or, of course, the other thing that might have happened recently was that we saw a little bit of distortion, and here was our D and then E, and we saw some distortion and an unexpected interaction between price and the FLD, and that the trade that we're in now is our F category trade. Let's speak about both of those possible scenarios, because both of them are possible, and we need to make the right trading decisions depending on which one of them is playing out, or at least we need to make the right decisions on the basis of both of them being possible. So let's first of all speak about the easiest situation, which would have that this is an F category short trading opportunity that we are in at the moment, an F category short trade, and that the F category short trade happened when price crossed below the FLD at that point over there. If that is the case, then we would expect price to rise back up to the FLD. In a G category trading opportunity, we'd then expect price to track along the FLD, and we would have an H category trading opportunity following that. That's what we would expect if we are now in an F category trading opportunity. However, there is the possibility, and it's a very reasonable possibility, that the F category trading opportunity occurred way back over here, and that what we've seen since then, as price has been tracking along the FLD, has been a G category interaction between price and the FLD, and that what we are in at the moment is in fact a short H category trading opportunity. Now, that is very possible, and you must remember that when you see price tracking along an FLD, it's a sure sign that you are very possibly witnessing either a B to C interaction or a G to H interaction. And we saw, and I spoke about it last week, we saw a very clear period of about 3 weeks of price tracking along the FLD. When you see price tracking along the FLD, a bell should go off in your mind saying, okay, price is tracking along this FLD. This is probably, given the sequence, a G to H category interaction between price and the FLD. Now, if that is the case, then of course what we're going to see next is an A category long trading opportunity. Okay, and I think that this is very viable. So what we need to do is we need to watch as price approaches that FLD. We need to watch it very carefully. Of course, we will be exiting our open trade at the break-even level or at the 3-bar trailing stop, whichever comes first. And so we will definitely be exiting our open trade. If price approaches the FLD, then I will be exiting the trade at the level of the FLD if we don't have a better level provided by the 3-bar trailing stop. And of course that's strictly following the rules of the FLD trading strategy. But now, do we stand by to enter into a long A category trade? This is where the FLD trading strategy is a discretionary process. You need to look at it and you need to decide what you believe the odds favor in terms of the analysis. Now, I've already mentioned that I would be entering into a long trade in the S&P 500, and I will personally be entering into a long trade in the NASDAQ, but I'm going to be very cautious with that long trade. And the reason for that has to do with what the implication is of what we're seeing in this chart at the moment. So even if our next trading opportunity is an A category long trading opportunity, even if that is the case, there is a very bearish implication to that. And let me zoom out and explain that to you, because it is very important, I believe, to understand that. And because one has to keep in the back of one's mind constantly when trading what the bigger picture is. Okay, now if the next interaction between price and the FLD is going to be an A category interaction, that implies the price is bouncing out of this 20-week cycle trough. Okay, let's assume for the moment that that trough occurred on Friday. There's no evidence yet that it did, but let's assume that it did, and let's assume that price just keeps going and bounces up through this FLD. We have another long trading opportunity. But what has price left in its wake? It has left behind it a very small, very subtle 20-week cycle trough. Can you see that? Okay, here is the shape of the 20-week cycle. Okay, roughly that's the M shape of the 20-week cycle, and this is, there is no doubt about it, if that is the 20-week cycle trough, this is what could be called a subtle 20-week cycle trough. Now, what does that tell us? Well, if we have a subtle 20-week cycle trough, it almost certainly tells us that the dominant cycle is not in fact the 20-week cycle, but it is a longer cycle, probably the 40-week cycle. Now, if the longer cycle, the 40-week cycle, is dominant, then what would we expect? Well, we would expect a subtle 20-week cycle trough to form, and we might very possibly see a straddled trough forming. And it is a possibility. This is not a definite prediction. But what I'm saying is that if the 20-week cycle trough forms, or did form on Friday, or forms perhaps sometime this week at a level perhaps not very much lower, then we have in place a subtle 20-week cycle trough, which might turn out to be a straddled 20-week cycle trough. It's not impossible, which means that we might well see symmetrical price action surrounding that trough. Again, not a prediction, but a possibility. Okay, now if we see a straddled 20-week cycle trough forming in price, then our A category trade will indeed be a good, profitable trade. But we need to bear in mind that we're going to see a strong bearish action following that. Okay, so there are two possibilities really for what's going to happen in the market at the moment. The one is that we are in an F category short trade. We're going to see price coming up to the FLD, possibly tracking along it, and then moving down. Okay, in which case, of course, we want to take advantage of that in an H category short trade. The other possibility is the possibility that a 20-week subtle cycle trough is forming now, or has possibly just formed in the market, and we're going to see another bounce, which we will profit from with a long trade. But we must be careful of the fact that the market is vulnerable to this strong move down. Okay, so that's what's happening in the NASDAQ at the moment. Let's take a look at our Forex pairs, and we'll start with the Euro to US dollar. Now, in the Euro to US dollar last week, I said that I was standing by to enter into an A category long trade, and we did enter into an A category long trade last week, and it has already proved to be a very profitable trade. And so let's just speak about the bigger picture first. Why were we entering into a long A category trade? The reason was because I believe that a 40-week cycle trough is forming in the markets, or has formed in the markets. And here you can see that nest of lows. It's a very staggered nest of lows. there's the 5-day circle, and the 10-day circle, the 20-day circle, the 40-day circle, the 80-day, 20-week, and the 40-week is actually off to the right. So it's a very staggered nest of lows, but as you can see, it is centered around the current time period, and so it looks very likely that a 40-week cycle trough has formed. Last week we were standing by for that, and I entered into a long trade as price crossed up above the FLD. Price did an interesting thing. On Wednesday of last week, it came right up to the FLD, and of course we didn't enter into the trade at that level because that was within the previous day's trading range. Okay, so we never enter a trade within the previous day's trading range, and so we didn't enter at that point, but we did enter on Thursday at the level of Wednesday's high. So that was our entry price over there at a level of 128,644. Our T1 target was reached on the day of entry. Again, something you see very often. We saw it in the S&P 500 last week, and we saw it in the euro to US dollar. So we took a small profit at that point, and we also adjusted our stops, reduced our risk to 1/6 of the original risk level. Our T2 target was taken out on Friday, and so we took a good profit at that point. And in fact, I think the profit we took was in the order of about $600, and because of course we have a bullish underlying trend at this point, so we're in quite a sizable trade, and so we took our profit from our trade 2, and we also adjusted our stop loss for our remaining trade 3 to the level of entry, making that a break-even stop loss. So the worst thing that can happen now to our trade 3 is that it will exit at a break-even level. We also, of course, start implementing our 3-bar trailing stop, and our 3-bar trailing stop is way down over here. It's in fact at our original pivot point, our initial stop loss. So that's the level of our 3-bar trailing stop at the moment, and so we would exit from our trade 3 at the moment at our break-even level. Of course, as the week's action unfolds, we will be adjusting that 3-bar trailing stop. This is looking very good. It's looking very much like a typical A category trading opportunity. What will happen next? Well, of course, eventually we do expect price to pull back down to the FLD, and if we're lucky, then our A category trade will actually weather that storm, and we will stay in the trade all the way into a C category trading opportunity. If we get stopped out of that trade, then we will be looking next for an opportunity to enter into the C category long trade. Let's take a look at the British pound to US dollar. Here is the British pound to US dollar, and here's an example of a trade which started out as an A category trade and has developed into a C category trading opportunity because I was bending the rules a little bit with the British pound to US dollar. Strictly speaking, I should have exited this trade. Let's speak about this quickly. Here is the position of the trough, which was very probably a trough of a long cycle, potentially an 18-month cycle. As you can see in this analysis, it is only a 40-day cycle, and I'm going to speak in a moment about why I've allowed that to happen in my analysis. But the trade that we made was taken on the basis that that was a very long cycle trough, and this was an A category trade. The FLD position has shifted slightly because of the difference in the analysis, but our entry was a delayed entry, as you can see, and it was 3 weeks ago. We entered into our A category trade at the level of the previous peak there, and because it was a delayed entry, I was bending the rules a little bit. The A category trade, strictly speaking, as you can see, was over as price reached this peak over here. Okay, and price pulled back down to the 20-day FLD and then started tracking along it. And now last week I spoke about the fact that price was still tracking along the FLD, and I was expecting a move up in a C category trading opportunity next. I suggested tightening the stop on that A category trade, which I did down to the level of this trough over here. Price didn't quite come down to that level, and so I didn't get stopped out of this trade. If you had tightened your stop to an even tighter level, and there was a very possible level over here, then you would have been stopped out of this trade. And it's an important thing to bear in mind, because if you had been stopped out of that trade, you would have been stopped out of that trade with a small loss. Okay, remember that our initial risk on this trade was down to an initial stop loss level right down here. And so you would have exited from your A category long trade at a very small loss, potentially round about a quarter of the level of the original risk that you took on that trade. If that had happened to you, then you wouldn't have missed this opportunity that I'm showing you now, because you would have been standing by for entry into a C category long trading opportunity, which is exactly what happened. And let me just clear that for a moment and zoom in even slightly further and speak about that. Assuming that you had exited at the tightest stop level of over here, could you have entered into the C category trading opportunity? Absolutely, you could have, because price gave us a small window of opportunity. Remember that C category trades are often very tricky to get into. You've got to take opportunities when you see them, and of course we speak about that in I think it's module 4 of the FLD trading strategy. We speak about the characteristics of each of these trading opportunities. And C category trading opportunities are ones that you often have to be very quick with, and we were afforded a very small window of opportunity to get into a C category trading opportunity, and the level of the FLD, of course, and we would have entered into the C category trading opportunity at very much the same level, probably somewhere round about this level. We wouldn't have entered at the level of the FLD. We would have entered at the level of the high of the previous bar's trading, and so we would have achieved an entry at very much the same entry price. Okay, so even if you were stopped out of your A category long trade prematurely, you should have entered back into this trading opportunity at the level, at roughly the same level, and you would be in a C category trading opportunity. Now, of course, when you are in a trade, you monitor that trade, and you track it in the markets according to the trade that it has turned into, if you like. And so although I entered into an A category trade over here, when it turned into a C category trade, of course I must now consider it as a C category trade. Okay, our T1 target for the trade, the T1 target is based, of course, on your entry. And so even though this had morphed into a C category trade, the T1 target is still determined by my entry, and so that T1 target was taken out on Friday of last week. And so we took a small profit from this trading opportunity, and we also adjusted our stop loss level, as you can see over there. There is our stop loss level, which is at exactly halfway between the initial stop loss level and the entry price over there. We still have 2 open trades, and our T2 level is up above the level of the top of this chart. So our T2 level is still ahead of us, and our stop loss on the remaining 2 trades is down here at this level over here. Of course, what we need to do now with this trade is adjust our T2 level on the basis of price crossing this FLD, because this is now a C category trade, and price crossed the FLD, as you can see, at roughly this level over here, which means that in fact we need to adjust our T2 level downwards. And so I will be adjusting my T2 level downwards to probably just a little bit above the high of Friday. So our T2 level will be coming down because, of course, we're no longer in an A category trade. We are now in a C category trade. And that T2 level was initially calculated on the basis of price crossing the FLD way back over here. But that interaction between price and the FLD is over. It has happened. It is finished. Okay, so the interaction that we are now trading is this interaction over here, and quite possibly that interaction is also complete. So I will be adjusting my T2 target to just above the high of Friday's trading, and if price continues to drop away, then of course I will be implementing the process that one uses when the T2 target is almost reached, something that we cover in detail in Module 5 of the FLD Trading Strategy course. When your T2 target is almost reached but is missed by just a few ticks, then of course you start setting some very tight stops. And so I will be doing that. What's going to happen next? Well, our next trading opportunity in the British pound to US dollar will, of course, be our D category short trading opportunity. Here is the interaction sequence again. A, B, C, of course, which we've already spoken about, and so our D category short trading opportunity will come next as price comes down and crosses below that FLD. So that's what we're looking at next in the British pound to US dollar. Finally, I mentioned earlier that I'm not concerned about the fact that the analysis on this particular chart has changed. So let's just speak about that, because it's really a very important point. Let's just turn off the trading so that we can focus on the analysis. All right, so what has happened here in the British pound to US dollar? Well, we have been anticipating price moving down into this 18-month cycle trough, as you can see. And we entered into a long A category trade on the basis that that trough was forming or had formed in price. Now, interestingly, after entering the trade, and we're now at a position 3 weeks into the trade, 3 weeks into that trade, Sentient Trader is presenting me with an alternate analysis, which is presenting the idea that this 18-month cycle trough hasn't yet formed in the market. Now, I don't believe that this analysis that is being presented is a good or true analysis, but I'm not actually bothering to correct Sentient Trader. And why am I not bothering to correct Sentient Trader? I'm pretty convinced in the trade that I am making is on the basis of the fact that that trough occurred over there. But of course, if that trough hasn't occurred and the analysis that Sentient Trader is presenting is a reasonable one, it's not an impossible one. If that trough hasn't occurred, then what would happen next? Well, of course, we would expect price to come down, cross back down through the FLD, and form a slightly deeper trough. So what should we be doing in terms of trading? Well, we should be entering into a short trade, and it would be, in fact, a category F short trade as price crosses down below that FLD. And so the analysis that Sentient Trader is presenting and the analysis that I believe actually is playing out are two slightly different analyses, but they are saying the same things in terms of what I should do next in my trading. And that's the important thing about this. Trading according to Hurst cyclic principles, and particularly using the FLD trading strategy, is a very robust process. Even when your analysis is not 100% certain, or you have two possible alternate analyses playing out, as one almost always does in most instruments that one trades, even when that is the case, you can still confidently make the same trading decisions. And so my next trading opportunity in the British pound to US dollar will be a short trading opportunity when price next interacts with that FLD, regardless actually of which analysis turns out to be the analysis that is actually playing out in the markets. Although, of course, I believe that I'm correct and Sentient Trader is wrong, but we'll see what happens with that. And that concludes our video update for the 8th of April 2013. I do hope that you have been trading along with us and trading according to our video updates in the Hurst Trading Room, because you would also have had a very profitable week. If you have any questions or comments, please put them into the box below this video, and I wish you, as always, a profitable trading week ahead, and look forward to seeing you next week in the Hurst Trading Room.